Hello everyone, today our group will present IMF conditionalities and Korea 1's devaluation, a case study of policy prescriptions and their economy fallout 1997 and 1998. This is our group member. I will start by introducing the background of our project. In an open economy with fixed exchange rate, the government tries to keep two things balanced. First, internal balance, meaningful jobs and stable price. Second, external balance, meaning the country's payments with other countries are steady and not in big deficit. But under fixed exchange rates, the central bank can't easily use monetary policy because it must keep the exchange rate steady. So the government mainly use fiscal policy and sometimes change the exchange rate by developers using the concern to fix problems. We'll use the LS-LM-BP model to explain how these policies affect the economy by looking at the good market, money market, and the balance of payments all together.
Under a fixed exchange rate system, the analysis of macroeconomic policies is usually based on the SLM-BP model. This model is a basic framework for open economic macroeconomic analysis, which is used to analyze the comprehensive impact of fiscal policy, monetary policy, and external factors on the national economy under a fixed or floating exchange rate system. S is equilibrium in the goods market. RM is equilibrium of the money market. BP is the balance of international payments. This model can determine the equilibrium output and the interest rates of a country under a certain exchange rate system. This model is particularly suitable for analyzing the transmission mechanism and the effectiveness of policy shocks under a fixed exchange rate. In this framework, the goals of macroeconomic policies are divided into two categories: internal equilibrium and external equilibrium. Internal equilibrium refers to fuel employment and price stability, while external equilibrium requires maintaining the sustainability of the balance of payment account. That is, there is no long-term current account deficit or surplus. Under a fixed exchange rate system, fiscal policy is more effective when capital is highly mobile. Expansionary fiscal policy increases output by increasing aggregate demand, but since rising interest rates may attract capital inflows, in order to maintain a fixed exchange rate, the central bank needs to actively expand the money supply, thereby cooperating with fiscal policy to drive economic growth. Monetary policy faces significant limitations under this system. Any decline in interest rates caused by expansionary monetary policy will lead to capital outflows and balance of payments deficit. The central bank is forced to tighten money to maintain the exchange rate target, and ultimately the policy effects are offset and the output remain unchanged.
Hello everyone, today I'd like to talk about policy continuation under a fixed exchange rate, with a focus on devaluation. In this system, the central bank cannot use monetary policy independently because it must maintain the exchange rate by extracting in the foreign exchange market. That means monetary policy becomes ineffective, and fiscal policy becomes the mean to manage demand. For instance, government spending can raise output by shifting the IS curve to the right. Devaluation is often used to fix external imbalance. It makes exports cheaper, improves the trade balance, and shifts both the IS and BP carries outward. This helps move the economy toward internal and external balance. However, devaluation also brings risks like higher import prices, inflation, and capital outflows if investor confidence drops. Therefore, devaluation must be supported by stable fiscal policy and clear communication. In short, it can be effective by only if it is well managed and part of a consistent policy strategy. Thank you.
Hello, I'm Wang Zhaoren. Today I briefly explain the role of devaluation under a fixed exchange rate system. When a country facing repressed current account deficit and failing foreign reserves, the government may deliberately devalue its currency to boost exports, reduce imports, and improve the trade balance. In the SLMBP model, devaluation increases net exports, shifts the IS curve to the right due to higher aggregate demand. The BP curve may also shift right as trade balance improves, through capital outflows could offset this if investor confidence drops. The LM curve stays unchanged initially, but raising output increases money demand. If the money supply doesn't adjust, interest rates may rise, putting pressure on the LM curve. In short, devaluation can support both internal and external balance when used carefully with other policies. Thank you.
Hello, my name is Amaria, and I will continue the next part, which is the causes of the 1997-98 Korean crisis. So the first aspect that we accused it is the causes of the crisis of the Korean crisis is the domestic structural weaknesses like excessive corporate debt with like highly leveraged chaebols, like too big to fail mentality, poor governance, and there's also like weak financial sector, which is inadequate supervision, directed lending, maternity mismatches, like short-term foreign debt funding, long-term domestic investment. And then there's overvalued won, which is accused by cohesive fixed exchange rate eroded export competitiveness. And then the second point, we have external shock, like Asian financial contagion, Thailand, Indonesia, speculative attacks, massive capital flight, rapid depletions of foreign reserve. And then the last point is the lack of transparency, which obscured true extent of problems, fueling panic.
From the Korea crisis, we will learn some important lessons. Devaluation can help a country sell more exports and fix trade problems. But if people don't trust the government, it can also cause problems like inflation or money leaving the country. So it's important to use devaluation with good plans like strong budgets and long-term reforms. Also, countries need strong values and early warning systems to stop big problems before it starts. Thank you for listening.